All right, it is Wednesday, July 20th, 2016, 3:37 Eastern Time. We're going to look at FCX here as a special request. And so into the metals and mining industries, the implied volatility is 81 on a weekly chart, 81 on a daily chart. And if you take a look here, 63.2 is the implied volatility. Earnings are supposed to come out on the 26th before the market open. So today is the 20th, so we're talking about 6 days from now. So if we take a look at Thinkorswim, surprisingly, I don't see a market maker move. So what we can look at here is on the weeklies, we have the implied volatility going up from 61.5 to 77, and the expected plus or minus move for the next 2 days is 51 cents, and for the next 9 days, $1.25, $1.24.4, and then 154. So the implied volatility is looking to continue to go up a little bit more. Let's look at the chart. As far as projected price, it looks as if we potentially have an inverse head and shoulder pattern forming with 14 as resistance trading at 12.30. So if there's an expected move of $1.50 and it's 12.30 now, so that would be 13.80, about 14. That would take us right up to the neckline resistance. Then if we were to go ahead and here's the head and shoulder pattern, by the way, potential, if we get up to 14, and then you're talking from the neck 6 to 14, is about another 6 points. So that would take you 14 to 20, okay, which, by the way, is pretty much a resistance level. There's a Fibonacci cluster at about 21. So we have a short-term run to 14, and we have a potential head and shoulder target heading towards 20. Not 30, 20. Okay, so if we go into OptionVue, and if we think that that's going to happen within a certain amount of time, let's go ahead and we'll just update the asset file for FCX real quick. Let's say that we think we're going to hit 14 within 6 days. And we expect the implied volatility to potentially drop from a level of 63, maybe if it goes up and the volatility comes out to 35, that's going to be a big drop, 63 to 35, so potential 30% implied volatility drop. So we go minus 30, 14 strategies, and goal of, let's say, just $1,000 for a round number. We'll do 20/20 as far as minimum price to buy, minimum price to sell. I do want to see open interest in whatever I do buy or sell. And let's go ahead and see what it comes up with. So the July week 5 11 call comes up for $1.49. Gives us about $878 of profit at a 42% probability of profit. We'll analyze that. And that was sorted by the best probability of profit. Best case return is for 33 cents, we could buy the 13 call. Okay. Now, Also, let's look at verticals, horizontals, and diagonals. So we do have a 41%, it's increasing the probabilities here with a vertical. Buying the July week 5 12 and selling the July week 5 13s. It's about looks like a 50-50 risk reward. And I can go ahead and superimpose those. Come down to one time decay line and make that July 26th. Okay, and it looks to me as if the best risk reward, so you'll put 894 at risk and get 878 out, and that is buying the July week 5 11 calls for $1.50. Okay, not sure if it's worth it. Let's go ahead and modify our targets. And let's say that we've got, let's say 300 days. We think it's a good long-term run with a head and shoulder pattern up to 20. And let's say that, well, let's give it 95 days, 99 days. Here we go. Buying 15 of the 16 calls for 64 cents through November would give you $5,000 return. Or for 92 cents, you'd carry it through to January with the 16 call for 92 cents. Or let's look at the probability of profit. 55, here's one, 48. This is buying the November 11s and selling the November 14s. Now remember, this is with a $20 price target now. And so here, this is about a 50-50 chance, 1-to-1 risk reward. So that would be the vertical where you'd buy the November 11s and sell the November 14s. Let's see, look at this. You've also got the, instead of the 1114, you get the 1115. Here, if you sell the 15, you get 80 cents for it. Here, you get 80 cents. Now remember, this is assuming a $20 price target, so you might want to be selling something a little bit, look at this. You could sell the 16 call, collect 60 cents, or you could even go out to January. These are the Januaries. And if I superimpose, this is the January 2017, buy the 12 calls and sell the 15s for $1.15. So it costs you about $1.10 for that spread. So lots of different ideas for FCX. All right, so I'm going to go ahead and just leave this video for you to, here you can go ahead and look at the spreads based on probability of profit. Okay, you can see here $1,300, $1,500 just by buying 3 of the January 2018 365s. You know, this still makes an assumption you're going to get out of it October 27th. So, but $3.65 buys you 3 of the January 2018 12 calls. So if you're a long-term believer in FCX, instead of spending $12 for the stock today, you only pay $3.65 by the bunch. Okay. All right. Any questions, let me know. And I hope that helps. All right. Over and out. Bye-bye.